All right, 2 o'clock now here at the KFYR Plus News Desk. And today we're speaking with Sam Borghi, a finance analyst at Investors Observer, to explore the dramatic shift in America's housing market where renting now beats buying. And what this means now for financial freedom, equity, and the future of home ownership. Sam, thank you for your time today. Sure appreciate it.
My pleasure.
So, what are the key factors driving the reversal of the buy rent gap in recent years?
Yeah, so we've seen a dramatic surge in mortgage rates really since the 2022 period. We saw a massive spike in housing demand during the pandemic. Eventually, the Fed had to raise interest rates because of inflation, and that obviously had a trickle effect on mortgage rates. So we've seen mortgage rates really skyrocket since 2022. You combine that with higher home prices, it's become a lot harder to finance. And so then when we compared that to renting, we found that rent prices have also gone up, but they've gone up more moderately. So when you put the two together, buying across the country, buying a home today or buying a home over the past year is significantly more expensive than renting.
Okay, for someone deciding between renting and buying today, what financial metrics should they evaluate first?
Sure. So I think there's a couple of things. First of all, you have to ask yourself, are you staying put? Are you willing to put down roots where you're buying? Because typically people who stay put and who buy a home and who live in that home for over a decade usually end up doing very well because the home price will appreciate, they'll have equity in the home, everything will be fine. And the other option you have to look at is also the percentage of your monthly income going toward housing. If it's above 30%, it's getting quite difficult to manage your other finances. And that's actually some of the levels that we see the federal government actually recommending as well. So you have to take a look at what percentage of your monthly income is going towards housing. If it's below 30% and you can afford a down payment and you're staying put, that could be a viable option to buy. Otherwise, rent prices now are declining across some of the major hotspots during the pandemic. They're becoming a bit more affordable.
Do you think the current market conditions will permanently reshape the American dream of home ownership?
It seems that way. It seems like a lot of young people are really being boxed out of a housing market given the enormous down payment that's required. I think there's some recent research that showed the average down payment is now something like $70,000 for a home, which is quite expensive if you're a first-time buyer. So ultimately, I think a lot of young people are starting to find different ways to build their financial future through 401ks, through stock investing, and they're not relying solely on housing because it's becoming a lot harder to get your foot in the door.
Yeah, you bring up a good point. How should the younger generations, my daughters, I've got twins that are 25 right now, how should they think about housing in their broader financial planning, especially with retirement in mind? Should they invest that money and just rent, or what would be your best advice?
Actually, I'm just covering this now at Investors Observer. We saw that investing in the stock market, when we normalize the comparison from 1970 until now, it's much bigger returns putting your money in stocks in the S&P 500 than it is in housing. So if you're just looking to build wealth, it seems like the stock market is still unbeatable in that respect. If you want to buy a home and you're young, I think the main question is, can you afford a down payment? Are you willing to maybe move to regions that are a bit more affordable? I know some of these areas in the Midwest, for example, they might not be as, the job market isn't as strong as it is on the coasts, but that's where there's more affordability. So if you're willing to buy a home in a place that might not have, as much demand, you could actually have a better opportunity getting something more affordable. Ultimately, a home should be a home, and you should be able to kind of be willing to stay in that home or to invest in that for multiple decades in order to reap your returns. So I think that the old adage of buying and flipping, that's becoming a lot harder. If you're going to be staying put, you want to make a home in a place, you're willing to stay put in that region, that might be a good opportunity for you to buy. Otherwise, you should kind of evaluate what your goals are financially.
Sam, are other countries experiencing similar buy rent reversals, or is this uniquely American?
Oh, other countries are as well. I'm originally Canadian, and the housing market in Canada is absolutely bonkers. Mortgage rates have gone down a lot quicker, given just the way the Bank of Canada has operated. But if you take a look at something like average home prices, north of the border, it's actually a lot higher. The median home price in places like Toronto, it's over $1 million for, basically a very small home. So you're seeing this trend across a lot of different countries, Australia, Canada, the United States right now. I guess the benefit is that on the renter side is that we're seeing a lot more supply of rent coming onto the market, which means that some of these Sun Belt cities Arizona, parts of Florida, prices of rent are declining. So that might be a more viable option. Whereas in Canada, supply of rent is not going up because it's very constricted in terms of what can actually go to market. So it's not just uniquely American. I think one advantage that America has on the rental side has been the increase in supply.
Sam, look into your crystal ball for us. Do you think the buy rent gap will continue to widen, or do you think there's a tipping point ahead?
I think there's a tipping point. I think buying will eventually come down. The cost of buying will come down as rates come down, because the Fed right now is moving on rates. We saw the 30-year fixed rate mortgage decline quite a bit over the last month or so. We're still above 6% though. A lot of the housing experts say we need mortgages to dip below 5 for us to see a lot more activity in the housing market. But I think if mortgage rates settle back down in the 4 range, I think that'll become a lot more affordable. I know that housing prices themselves are elevated, but if you can get the mortgage rate down, it makes that monthly bill a lot more digestible, which would actually help kind of balance out that buy rent gap. That's kind of what I expect to happen, maybe over the next 12 to 18 months.
Okay, what indicators should we be watching for to predict when buying might become a little more favorable for us?
Sure. So you can look at things like mortgage rate, the 30-year fixed rate mortgage. For me, that level of 5% is really crucial. Around that level, you start to see a lot more activity. You start to see average mortgage costs decline. You also want to take a look at housing supply. Like how much housing is being built. That's coming onto the market is really important. Also, indicators that existing homes are actually going up for sale as well is another very important indicator, because a lot of people during the pandemic and after, if you own a home, you don't want to sell because you're going to sell your home with a mortgage of 3%. You're going to get a mortgage of 6 or 7%, despite the fact that you have a lot of equity in your home. So I think looking at activity on the existing home side, more homes being put up for sale while mortgage rates declining, that could be a good indicator that the market is beginning to kind of thaw and more people will have an opportunity to get in on something with a pretty decent deal.
And finally, Sam, as we face this historic shift in housing affordability, what final advice would you give to Americans trying to balance financial freedom with the dream of home ownership in today's market?
Yeah, ultimately, I think the dream of home ownership has to be put into perspective. I mean, your home probably isn't going to be just your ticket to financial freedom anymore, given the fact, where housing costs are today. The 401ks are doing really well in helping people build wealth. The stock market has been doing very, very well over the long term. So anybody that wants to build financial wealth and financial well-being in the future, I think the stock market, 401ks, employer matching, that's really helpful. And when it comes to real estate, I think, if you want to put down roots somewhere, you're willing to stay, you want to live in that particular region, it's your home, buy a house, you'll build equity, but don't expect like a quick return on that. That takes time to build. So ultimately diversify away just from thinking of a home as a primary ticket to wealth creation.
Sam Borghi, finance analyst at Investors Observer. Thank you so much for your insight today. I sure appreciate that, sir.
My pleasure. Thank you.
You got it. 8 minutes after the hour here at the KFYR Plus News Desk. We'll take a break. We'll be right back here on KFYR Plus.